A record-breaking move from global energy agencies just failed to stop oil prices from skyrocketing. This is Kenya News Update today. Coming up, you'll discover why a historic 400 million barrel release couldn't calm the markets and what this means for every Kenyan's wallet. Meet the Sharon oil refinery in Tehran. On March 8, 2026, a dark smoke cloud engulfed destroyed vehicles after an overnight airstrike. While war rages in Iran, oil prices are surging once again, with Brent crude topping $100 per barrel on Thursday. But here's the twist. This isn't just about war. It's about a global energy crisis that's hitting home. Welcome to another edition of CNBC's Daily Open. I'm Leonie Kidd reporting from London, where oil is on everyone's mind. Historic shock and awe moves from the International Energy Agency and the U.S. administration have failed to turn the market tide. The IEA agreed to a historic release of a record 400 million barrels of oil. The U.S. also said it would tap 172 million barrels from its Strategic Petroleum Reserve to help lower energy costs. Yet, according to markets, it was not enough. And then, something shocking happened. Iran has continued to send large amounts of crude oil via the Strait of Hormuz to China, even as the war between U.S., Israel, and Iran has jeopardized broader supplies through the critical waterway. This complicates the energy picture dramatically. Global equities remain sensitive to these moves. Asia-Pacific markets fell Thursday, with Japan's Nikkei 225 and Australia's S&P ASX 200 leading the declines. European stocks are expected to open lower, while U.S. futures are also pointing to another negative session. But here's what nobody's talking about. The war that continues to rage in Iran has not distracted President Donald Trump from his trade war. The U.S. administration on Wednesday launched trade probes into more than a dozen countries, with the goal of replacing the reciprocal tariffs, which were recently ruled illegal by the Supreme Court. The main targets are the EU, China, and Mexico, alongside a slew of other nations including Switzerland, Norway, Japan, India, and South Korea. In other words, energy markets are volatile, supply chains are tightening, and trade tensions are heating up again. Global markets rarely enjoy juggling all three at once. Here's the part that will blow your mind. The IEA, with 32 member countries and 13 association countries representing 75% of global energy demand, couldn't stabilize prices. This isn't just a number, it's a signal that traditional tools are failing. The 1973 oil crisis saw embargoes that shook the world. Today, we're facing a new kind of shock, one where releases and reserves aren't enough. And then, the impact hits home. For Kenyans, this means higher fuel costs, inflation pressures, and economic uncertainty. Some say it's a temporary spike, others warn of a prolonged crisis. But if oil stays above $100, who pays the price? Everyday consumers. The payoff is clear. A record-breaking move failed, oil prices surged, and global tensions escalated. Do you think the Trump administration's trade probes will make things worse or better? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking news on how global events affect your pocket.